The following is a presentation of TFNN.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us, folks. We have the Dow right now up 86, NASDAQ up 65, S&P's up 15. We got gold down $5, silver's off 11, platinum's up 13, bonds down 16 ticks, King Dollar down 10 ticks, trading at 79.23, and Apple up $55. Apple's taking a bite out of the NASDAQ.
It hit a grand slam last night, you know?
Yeah.
I mean, really, you take a look at earnings and revenues and, monster money. Holy cow.
Monster
now
money.
They're up to $100+ billion in cash.
In cash.
Oh, man.
No doubt. No doubt. So, we're at 616.
Yeah.
You're at 618. Of course, inside the NDX 100, it's all the juice. And if we go over and take a look at the 3Qs for a second, this is what you have out here, folks. You get 16 million. The 3Qs got to do over 80 million today. If it doesn't do over 80 million, you get a failure.
Yeah, absolutely.
Sell it.
Now, so far today, you got Apple. So Apple's coming into that swing point, where it really started that, the B to the C leg.
Yes.
Okay,
That's
April
right.
18th.
Right.
34 million shares there.
Right.
And so far today you've done 14 million shares in the first 39 minutes of trading.
Right.
So it should have enough energy to. Question is he going to get up and maybe test that area, maybe even get up and test the actual swing point on April the 10th? We'll have to wait and see.
Yeah. I like the whole setup.
Yeah.
I like the setup because what you have, folks, is that Apple's not going to save the market.
No.
That's the bottom line.
For sure.
So the correlation is sweet. Like if I go over to the IWM first, right? What you have is that you get no juice whatsoever. We're talking about 11 million shares going into 101 million shares going into 46 million going into 66. If you go over to the S&Ps. Now, it's a big weighting inside the S&Ps
yes,
also.
Right. That's right.
But the S&Ps are screaming that they can't do anything.
Yeah.
Look at this. The SPY, folks, you couldn't get a better setup. And, we're talking, it's right into ice, man.
Yeah.
So, into the downdraft. So, you got, here, this is the number. Now, watch this. We're at 138.84. If the S&Ps ever close, which which would be hard to do today, but if it ever closes under 138.34, get out of the way, because that is the most conservative number. What it's really testing out here is the 139.36.
Right.
But that lower one is a big number. So.
And you're just simply going back to the April 10th bar. Is when you're taking a look at the close below 138.
That's correct.
You're saying, hey,
that's correct.
If after Apple stepping up to the bat, being half or more of the earnings inside the S&P,
right? And I think it will
today. If after today you get down below that area, there's a big, huge signal.
And I think it will.
Yeah.
Flat out.
Yeah.
I don't think it's going to take much. I don't think it's going to take much either.
Yeah.
I like the idea when it's just a one stock market.
Yes. Yeah.
Particularly, folks, after we've already had the amount of ABC structures on the way down. That's where that's the bigger issue. So.
Yeah. So I was just as we were coming on the air, I was saying that Coke is the board has approved a 2-for-1 stock split.
Yeah.
So. And that stock has been on a tear, too.
It has. No, it has anyway. I mean, this stock here, basically was and is, let me see, it's been acting good for a long time, right off the lows. Because I remember when I turned the energy onto the stock a long time ago, and,
yeah.
You can, let me see, I'll put it up even longer. I mean, this is how the stock's supposed to act, folks. And, just like IBM. IBM was acting correctly, We'll see, what else, what kind of, you had the juice there.
Yes.
So we'll see what Coca-Cola has done. I think it's 76 is the long-term ABC up, going all the way back from July of 2010.
Okay.
See when that baby busted out through here.
Yeah.
So most of the time when you see a longer-term one, then it's got to rest. So I put this on a maximum, and we put it on a weekly. Well, let's see. Let's do it a monthly. Okay, so you see on a monthly, what you have here, see, I mean, look at how it took that swing point out in 2010. On a monthly, it was 275 million versus 215, and then it blew it away with 332. You see what I mean about the recharging of that? See, yesterday, folks, we were talking about a recharging, that what it has to do is get back underneath it again and go after it again.
Right.
This is a classic. The first swing point, now I get a monthly swing point up here on Apple. January of...
On Coke.
Of Coke, I'm sorry. Everything's Apple. My head looks like an apple. January of 08, 65.59, you had 275 million shares.
Yeah.
It tried to make it with 203, and it couldn't handle it. Okay? So watch what happens. It goes back underneath it again, right? Comes back up again, tries to make it again, can't make it, 215.
Yeah.
Goes up higher, bingo, comes back underneath it, and then takes off.
Yeah, and you're looking at the month of August 2011.
Of August.
Yeah.
Right, and then it takes off. So the middle part of that, folks, is when I always say it's build and cause.
Yeah.
It's build and cause. And then once it takes off, well, then, you know, what you can do, you can take the top of that. Well, actually, you know what? Watch this. Apple is a rocket ship. Because
Coke.
Coke. Jesus. You can take the top of this, which is 65, and you take the bottom, which is 37.
You come all the way down to...
And add 30. You get 95 on a longer-term basis. Now, that's 5 years. It's 5 years, but that's where it wants to go.
Yeah.
So that is action there. So drink some Coke and have some dividends. What is Coke paying now? I know when Angie got into it was about 4 or 5. Yeah, see, it got higher, so it's 2.3 now. But when that was low, folks, that was paying a 5.5% dividend, depending when you got into it.
Gotta love that.
Huh?
Gotta love that, huh?
No, I know. Big time. Big time. No doubt about it. No doubt about it.
So if we take a look at the just the general markets, you go to IBD 50.
Yeah.
And I'm just going to see if I've got just a couple of them in the red, but they're certainly charged up. You've got, you know, Apple up $53, Priceline up $20. You know, the only ones that are on the way down right now, any movement on the way down, you've got UBNT, Ubiquity Networks.
Yeah. Okay.
Quest Core Pharmaceuticals, EPAM. That's it on the way down. And on the way up, you got Apple, Priceline, Panera Bread up $10, MasterCard up $10. That Mexican restaurant.
Well, that's good. They all bought the gap.
They did.
We'll see what happens. You know, bottom line is that you know, Priceline, PCLN. Now that's, you'd want that. Now remember what the difference was between when we were looking up the difference in the sales between Apple and Priceline. It was dramatic.
That's right.
It was dramatic, meaning that the sales on Apple, folks, there were large institutions getting out of it.
Absolutely.
Priceline hadn't had that yet.
Yeah.
What Priceline does have, though, is that, you know, you come off that high of 774. You get down to 678, so $100 in 6 trading days, which is pretty wild. You'd love to see this come up to about 719.25, and that'd be the lows of the first downdraft. You know, with lighter volume, of course. Well, you know, we'll see whether it can make it that high.
And the volume there is 2 million shares today, folks. You've done 338. You know, in the first 45 minutes of trading. So even 6. You know, today would be the day for it to do it.
Right. And what I expect you'll see, though, is that when you get days like this, right, most of the time everything is in the first 45 minutes. And if that happens, folks, that's when you always hear follow through. There's no follow through.
Right.
And there's no follow through. What ends up happening? Everyone's excited. You know, they buy the gap, and then they get decapitated.
You know, yeah, I use it as kind of the Game 7. You know, you win Game 7. Yeah, there's a great Game 7 tonight. You going to watch the Boston Washington game?
What time's it?
7:30.
Oh, perfect.
You know, you have to change your schedule around. You know, I imagine the puck will drop around 7:40, be over around 9:30 or so.
Oh yeah, we're gonna do that.
Should be good, you know.
Yeah.
But when you win a Game 7 like that, or when you know, and I consider what Apple did yesterday is it would be a day for the money managers and folks to celebrate. You know, and people you start piling on. You know, it's everybody's coming off the bench and piling on, and all the volume in Apple was in that first 1 minute.
Right. I mean, now,
and I just got a 1 minute chart up just for the heck of it, but it was all, and then you got the actual trades.
Yeah.
So you're taking a look at the large block trades, or what have you, and you're seeing the actual volume kind of dissipate.
Well, yeah, no. You know what's going to be interesting here? Now, see, if you happen to watch Tiger TV, folks, right? When you're looking, what you're looking at right now is the block trades this morning. And with the gauge here, this is what you want to gauge, okay? There's a couple of them that you'll have green arrows and red arrows.
Yeah.
And what that means, okay, it doesn't tell you where the pressure is. What it does tell you, though, is that someone is selling into the down tick.
Yeah.
Meaning that, okay, just get me out.
Yeah.
Okay?
Yeah.
Now, well, no, it doesn't mean just get me out either, by the way, okay? They could be buying at that point, just so you can understand. Because many times what happens is that people think that we used to have, level 2, and they thought you could get a lot out of level 2, but that was 1993, 94, and 95.
Okay.
After that, forget it.
Yeah.
But what it does give you, it gives you a basic indication, okay, of that, okay, as the day goes on, where is the pressure?
Yeah.
Particularly where's the pressure?
Yeah.
And what I look for is that I'd be just looking for spikes. Like, they're going to, unfortunately, they're going to get Apple, up back to this. It seems like it's never enough for Apple, but it isn't. Because,
I understand.
Because now this gap is too big.
Yeah.
So they got to get it away from the gap. And if they don't get it away from the gap, and this thing, gets back into $610 and 606, well, bottom line is that we could have some very fast action.
Yeah. Now the way that Apple's trading here, from your perspective, with the gap away this morning,
right?
Would you say that this is now more in a consolidation up at the top here? With the large volume, that it still didn't really didn't bust through that gap going back to the 13th and the 14th of March.
That would be correct.
Yeah. So I mean, you're looking for some real volume to punch through it, but right now you'd kind of be in a fairly large trading range.
Yeah, the range is 555 to where
620.
Yeah, so. Exactly. And if it doesn't do. Even it's got to do 30. It has to do 35.
No, it's going to do volume
today. It's got to be 35.
For sure.
Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses. Our phone number is 877-927-6648. Give us a call, folks. We'll come right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us, folks. We get the Dow right now up 81. Nasdaq up 62. S&Ps are up 13. And if we travel around the world for a bit, folks, let's see. Last night,
definite divergence between the FTSE and the DAX this morning. I mean, large divergence there, because you got the FTSE trading well off of its highs.
Look at that. Yeah.
Well off of its highs.
Right.
Whereas the DAX right now is, not too far away from the highs that it put in early this morning.
Yeah, so, see, the ABC,
pretty interesting.
The ABC downs are all over the place, man. Bottom line is that the FTSE's saying it today, and the DAX is already a confirmed one, so let me see how it's going up. Okay, so I won't get that volume until later, but see, the DAX had already broke that swing point. And folks, what happens is this. Right. This is where, when you're looking at both sides of the market, right, that time in the trade will confirm both sides. It doesn't mean it's going to confirm what you're saying is right. It just means that it's going to tell you and talk to you. And in this case, when I get the volume, it is absolutely confirming this an ABC structure down.
Yeah, and you're looking at the 23rd, April 23rd, right, when it got
That's
down
correct.
to a low, it closed out at 65.23,
Right.
closed below the B point.
And now what you do is this: you go on the other side and say, okay, what we did 192 million on the way down. We broke the B point on 197. If today, at the end of the day, this does less than 192, all that's doing is doing a smaller ABC down inside the larger ABC down.
Got it, okay, yeah.
Which is pretty cool. Because what happens, let's say in the course of the year, folks, in the course of the year, about 7 months out of the year, the market is talking, walking, squawking, huge.
Yeah.
And we're at that level now because we have a market, meaning that the trend was so dramatic on the way up.
Right.
Then you're bouncing back and forth, and it's just like markets when they're dramatically low. That happens on the way down, the trend is just one way. Then at the lows, you get, a two-way market going. So.
Right. And we're coming into May, baby.
Yeah, big time. It's amazing that May is this quick already, isn't it? It really is, man. It's a mind blower.
With gorgeous weather here in Florida, folks. I mean, I don't know that we have really seen it like this. I can't remember the end of April, beginning of May being like this. It's actually cold.
It was 67 degrees last night, folks.
Cold.
Waking up this morning, you got to picture something. The water's warmer now, so the air is just so clean because we had so much wind.
Yeah.
And, the birds are chirping, the dogs are going crazy, we're going crazy. I'm digging this global warming, man. I mean, this global warming, I think what it's done is made Florida a little bit cooler.
Keep it going.
I know. Seriously, man. I mean, it's and
I'm talking, Game 7 tonight, watching it on the beach. It's going to be cold.
That's right.
You're going to have to have a sweatshirt on.
It's all right. We'll think we're in Boston. You'll think you're Detroit, now I think I'm in Boston.
Yeah. Be like, this is great.
Perfect. Yeah.
So I included what I included in yesterday's newsletter from my clients was a study just simply going back and take a look at the 6-month cycles.
Okay.
Just going back to 2005.
Yeah.
So and it's been working 75% of the time.
Oh, nice.
75% of the time.
Nice.
What I didn't do is take a look as, whether there was one leaning towards more on the upward trend versus the downward, the May, October. But still has worked 75% of the time.
That's big.
Yeah, it is.
I remember,
it really is. Enough to pay attention to,
right?
For sure, and to take a look at where your stops might, if people are long and strong, they really should at this stage, knowing that cycle, that 6-month cycle, though, folks, we're talking about going from May to the end of October, where the market has closed lower, during that cycle period,
right,
versus the October through April, where it's moved up higher. So if you've got a probability like that, going back to 2005, and I could have gone back further, I just got tired.
Yeah,
I thought that was enough. That was enough time periods for me to look at.
We had a tiger in the den. His name was Tornado.
Yeah,
and his wife. He always says to us, his wife always. It didn't matter. I'm talking about the last 20, 30 years. Always sold in May.
Yeah.
And he said flat out, man, she did great.
Oh,
yeah, she just it didn't matter.
No, for sure.
Just always did it.
Yeah.
And it's interesting understanding that concept. And it's over the course of years and. It's pretty cool.
Yeah, so you got a 25% chance that it's going to not work.
Yeah.
All right. And so just knowing that, what you want to do is you want to go back, take a look at your portfolio, and have a certain amount of, have some stops in place.
Right. Right.
You don't have to go short, but like what Tornado's wife was doing was just simply going to cash.
Exactly.
There's nothing wrong with that, especially when it's King Dollar.
King Dollar.
And what is the king?
What the heck is a king?
Where did the king go this morning?
I gotta wake this king. I gotta wake this king up. Look at this. Okay, so yesterday we had 11,000 contracts. We got 8 right now. It's going into 28. Yeah, it's trying. It's it's.
So you don't think that Apple can cure Spain's ills?
No, I think Apple is in good shape, but I think Apple has seen its highs.
I love it.
That's the bottom line. Yeah. I always say the market lets get you a chance to get out 3 times.
Oh yeah.
And here's the next time.
Yeah.
Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses, you stay right there. We're coming right back.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals. time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling with us. And listen, folks, Kate Stalta, our small cap specialist, if you'd like to get her newsletter, it's a free newsletter. This is the last week that it's a free newsletter, absolutely free. Just come over to our website at TFNN. Just give us your name, give us your email. You'll get that newsletter out here today. It's a beautiful thing.
Yes, it is.
Totally, man. And next Wednesday night, folks, 6:30 to 7:15. Ken Shreve is going to be doing a webinar, and that webinar is also free. And what that's all about is that what to do in markets like we have right now. Hey, I got my shots on.
Yes, you do. Yes, you do, baby.
Oh, man. I folks, you know what? TV is beautiful, and so isn't radio. But I literally do have my shots on this morning. Well, what happened, it was so beautiful out. It was so beautiful out this morning that I was just out, and I didn't want to come in.
Yeah, no, look, I absolutely can understand that.
It was one of those deals that I'm listening to the birds, the fish are jumping. I'm saying to myself, oh, man, you got to be kidding me.
Yeah.
This is like sick.
Oh, yes. No, it is the most incredible thing that we've seen down here.
It really is. Global warming, thank God. Oh, my God.
I love it.
So let's take a look at some of the high-volume stocks. Not that we have high volume in the markets yet either, but let's see what we have. Your Bank of America is up 3 cents. Juniper Networks down 146. Hess is down 3. You get Broadcom up 165. Now, the Broadcom deal's on Apple. Micron Tech's up 1.
You know, you got that little tool. What's that? Do you remember the tool on
I know. I got to remember. I know. You know what, folks? We're going to do that by tomorrow morning. I'm going to... The tool Steve started is pretty sick that I can't get it right now. Well, I'll check out in the next commercial. What it is, I have this tool, and it will give me a supply chain for Apple. Okay. Let's see.
Yeah.
I will get... It'll only take me a few seconds, and then it should, I hope. But what it does is this. It's an amazing tool. So this is what it does. You can take any stock, and it gives you a supply chain and the percentage of materials that supply the company.
Yeah.
Okay.
It's great because it becomes another way for people to, take a look at some other plays out there.
Exactly. Right off them. You know what I mean? So, and in a way that you can also play it, folks, what ends up happening is that this is not a lagging well, it's a lagging only by a couple days. But it's giving you the supply chain as it goes through the marketplace.
Really?
Yeah. It changes every day. It changes every day. Yeah, exactly. Where they're getting, it's interesting where they're getting most of this, because they have a disclaimer there. But where they're getting most of it is the tax issues and they're pulling them off those swap issues and tax issues as, companies have to do business. I know. Isn't that interesting? Yeah. It's gleaned off public information because the companies don't want to give it.
Yeah. Well, it's pretty cool. I mean, that's what when you take a look at the data that's available to us today.
Yes.
Versus, 2 years ago.
Right.
It is amazing.
It is. No, there's no doubt about it. There's no doubt about it. So if we go over to those small caps, it looks like the small caps and the SPY is going to get into the gap first.
Now, on the small caps, can you go see what's putting the juice into it today? So not like you can on the Dow, where you know exactly
how many points exactly, because there's so many of them.
Yeah.
So the small caps, if we do the IWM, once you're under 80.74 and you're 80.88 right now, that's it. When I say that's it, folks, so watch. If you think the market's strong, this is what the market has only done. Well, first let's start with the small caps. The small caps needed more than 6 million shares on a 10-minute bar at 80.74. And you know what they got, folks? They got 3. So now you just need the price to come back inside. The SPY, we take a look at the SPY, and we put the SPY up, put that on 6 days. And what you're looking at the SPY is that the SPY needed 11 million shares, and they got 13 million. Okay, so the SPY had it. Okay, the Qs, though, this is going to shock you, folks, because Steve and I were just looking at this. The Qs didn't have it and don't have it, but I'll give you the price point that they're going to close under. Now, this gets really interesting because the Qs, of course, have the good old Apple. Well, the Qs needed 5.8 million. The price point up there, the top of it was 66.80, which they didn't get to. The bottom of it is 66.41. So as soon as you are below 66.41, which you are now, that's saying it's a failure. Now this is on intraday, folks, okay? But watch what happens. So your benchmark is 5.8. Well, you know what you did? You did 5. Now, it should have done a lot more than that. That's the real bottom line. So what the next deal is this. This is how this goes. If you close the day under 66.41, you have action, meaning it's a failure.
Yeah.
The larger failure would be that if this thing does less than 80 million.
Yes.
Right. And then the next largest failure, well, it's already under the 66.51. This thing is not performing. This is pretty amazing, actually. With Apple being up, Apple's 20% of it. And it's not performing.
That's amazing.
It's not performing, period. It's just not performing. I mean, it should be, you tell me what is the next thing that's going to, bring the NASDAQ up another, 60, 70 points,
In fact, we wanted somebody to call in who owns Apple.
Yeah.
Just to chat.
To walk me through it. What I'd love to know is this. How do you stay in the equity? And this is what I was just talking to Steve. See, there's a huge, when I say that the market gives you 3 times to get out, I would like to hear someone that stayed in, not getting out, and, give me the head game behind that. Because it's going to be tough. But you're getting rewarded. I just like to understand that head game.
Yeah. Yesterday we were talking about, really, we started it 2 days ago when we were taking a look at the 30-year bond. And we were just taking a look at the 1 to 1.618, got up there, has pulled back a bit.
Right.
So got the exact same chart pattern. So if you were looking at this chart pattern right here, just looked at this, you didn't know what we were looking at.
Right.
And then I pull up this, you'd think we were looking at the same chart. This is the 30-minute ES Mini.
Okay.
The same chart. And what it did do this morning was it got up to that 1.618, and now it's pulling back a bit.
That's wild, man. Yeah, that is wild. And
which is what you think that. It's really one of your first
the 1.618, right? That's a turn. That's and on a short-term thing, it's a short-term turn. On a longer-term chart, you're turning. I love seeing those at bottoms because no one will buy them.
Yes.
It's like
too much fear.
Oh my God!
When's price going to stop?
It's like what's so funny when you really think about it is that fear is a funny thing, and if you get your head wrapped around fear, right? What you got to do, folks, is just throw it away. You got to look outside and say, what are you scared of? No,
No.
It's like you're alive and kicking. It's like, how bad is it?
Yeah.
You know? And I know that's not easy to do sometimes, but, you know, just take a little bit of time for yourself, and then you get re-energized, and then, boom.
Well, but I mean, what you're saying, it is, you're not born with fear, and you're not born with courage, because those are really your two opposite, your polar opposite. Because when you're saying you're just simply, if you've got fear, it's just a matter of looking out the window and saying, no, the heck with that, I'm just going to be courageous.
Yeah.
And they're both decisions.
Yeah.
That's really all, you can decide to be afraid of whatever's getting thrown at you.
Right.
Or you can just get rid of it.
Right.
To me, I know.
You
just try to kind of simplify it.
It's interesting. You know what I mean? And it always has to do with, what if? Who cares what if?
Yeah. And what's really great about it is, you're going to always consistently get it in the marketplace. The shorter it doesn't matter what time frames you're trading on. The shorter the time frames, the more opportunity you get to experience fear versus the longer term, because your patterns are going to set up much quicker.
Yeah.
And so, what I always thought was pretty cool was just simply being able to go ahead and journal.
Oh, yeah.
What you were thinking, no matter what patterns it is you trade.
That's right.
When the price gets to your point and you don't pull the trigger, you want to really understand what fear was driving that decision.
Right.
What was it?
Right.
Because what you'll find is you want to be able to find that pattern that you yourself have.
That's
so
right.
that you can, becomes a lot easier to step back, take a look at it, and say, my God, what is up with that?
Yeah.
Crap.
No, that's right.
And then it becomes a little bit easier to bust through it.
Yeah,
it's hard if you don't journal. It's very difficult to go back and try to put yourself in the place of what you were thinking at that time, why you didn't take. That's why you really got to write it down. Journal it down.
I absolutely agree, man. That whole simple concept that if you actually write down what you want, you get it. I mean, and that,
that's for sure.
You've heard it 1,000 times, folks. Okay, but let me tell you something. Most of the time we don't do it. But if you do it, it works.
Yeah.
I just found a book. I found a book, and this is funny because it was a Tony Robbins book. Angie and I walked the coals, years ago, maybe 7, 8 years ago, and I found that they give you that little book with it, right?
Yes.
And I got to the first page. Right in the book.
Cool.
But bottom line is that I wrote down quite a few things, and I cracked up. I mean, they were all already done.
No, absolutely.
It's interesting. Do you know what I mean? It's
Yeah, there is nothing like being able to. Now, in that case, there you're spending 2 or 3 days in essence. Even though you're in a large group, you're really spending that time with yourself, just dealing with your own personal, missions or what holds you back.
Right.
Which is a very cool thing to be able to do. What's interesting about that program. I've taken all my kids to walk those coals a couple of times.
Yeah. And folks, what you're doing, you're walking coals that are
a couple thousand degrees.
Yeah. And you're actually out walking them.
Right, with your bare feet.
Yeah.
With your bare feet.
And you don't get burnt.
No. Well, if you focus on getting burned, you get burned.
That's pretty wild, isn't it?
Yeah.
I know.
And so it's no tricks.
Yeah.
And,
you must be tricking your head, though. I wonder how that still works. Because
what you think about, you bring about. What you focus on grows. How's that work? You say it every day.
No, I know that. I know that.
You lead all of us troops.
Yeah, right.
In that thought process.
Right.
Now, what's kind of cool, folks, is that because it is all in our head.
Yeah, it is. Absolutely.
That's
absolutely.
why. So what is actually cool about that process is that and that's all done during the first 10 hours, or what have you, on the first day. And you would think that would be the big element.
Right.
That's actually really small compared to everything else that you go through there, right? So you think that walking those coals...
That's the physical elements, right?
Yeah.
Yeah, that's right. That's right.
So that's really kind of the cool process. So you talk about that book, and if you were going to learn any one thing from, let's say, Larry Pesavento, he wrote a book called The Trader's Diary.
Okay.
And so what he did was, that's what, I don't know if he still does it, but he used to journal every day.
Yes.
While he was sitting there in the trades, and he published that book.
Yes.
So it is good to really go back, and so
for sure.
And so that's why we pass along things like that to folks out there.
Yeah. There's no doubt, and that's why listen. That's why I can't wait to see what happens with Apple, because I'll give you the 3 times that the market has allowed people to get out, folks. So it'll be interesting to see what happens here. Your first time is that just after acceleration up $400. It's like, okay, you're going to take your money or not. That's the first time. Any time up at these highs. That's anywhere from $600 to like $640.
Because in essence, what you're saying here is, folks, did you live through that last real estate bubble that we were in?
Oh, any of it. Yeah.
You know what I mean?
Yeah, exactly.
So it's kind of a similar. Try to link the known to the unknown.
Right. You're up $350 on a trade. Okay. Did you take any money? Okay. So Apple goes from 644 straight down to 571. Oh, all of a sudden you're
where you saw some institutional selling.
Huge.
It wasn't just you and me or somebody else.
That's right.
Yeah.
And now you're back at March 14th in 3 days. Okay, market pops again. Pops you up to 620. Did you take the money then? Maybe not. Market goes down now to 550. Here's the third time. It's popping up again.
Yeah.
So we'll see where it shakes out, but and what happens, folks, to understand this, now that's the bullish side. The bears always have 3 times too, and that's the tops and bottoms. It's just funny how it works. If you actually go back and look at the market in 2000, it gave people 3 times to get out.
Yeah.
That's where I got it from, actually. We were talking about the study I had done,
yes.
On the Qs for a year.
Yeah.
I did every swing point, but what I was doing at the same time, I was looking, well, actually in 2003, I started looking at 2000. When I start catching on, I say the market gives you plenty of time to get out. There's not like a one-time deal.
Right.
It just is not. On both sides of the market.
Right.
So it's like so I went back then and did the same type of study, and I said, look at this, man. 3 separate times getting out, So it's interesting. So.
No, and so how odd is it that your third time is coming right around May?
Yeah, that's insane. It's insane.
Well, you've had a program that's worked 75% of the time.
Yeah.
That's why, so you've got plenty of time to get out, or at least go ahead and put a stop in place.
Right.
So if you've ridden it all the way up and you say, okay, I like this pop, may go higher, you've got to get a stop on Apple at least underneath the 555 area.
Yeah.
I mean, at a minimum, for those folks
I agree.
that don't want
listen,
to, you at least, folks, with these kind of earnings and everything else, if Apple's going to take off to the moon, it should just keep moving higher.
I'm with you. But, it's...
Not saying that's what it's going to do, but just giving people, some options.
No, you're right.
Listen,
man, I can't wait to hear the rest of the written of this story. Do you know what I mean? No, I can't. Do you know why? There's not many stocks that have been in the market like Apple.
Oh,
no. Qualcomm was a 200-point ABC structure on the way up, and we got it.
Yeah.
And then it imploded.
Yeah.
Then it went down 600 points.
Yeah.
Yeah. Yeah, how's that? And with clients, we got 170 points out of the 200, right?
Yeah.
And there were clients that were in it, and they wouldn't get out of it.
Yeah.
They wouldn't get out of it. You're talking about learning something then? Oh, my God. When do you have and by the way, folks, that 200 points was in 6 weeks.
Yeah, exactly. A lot faster on the way down.
Steve Rhodes, Tom O'Brien, you stay right there, folks. We're coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us, folks. Let's go over and take a look at those small caps first, because I think we're getting into that gap, and that's, let's see, we get into that gap yet? No, she's refusing that gap, so she's close.
Should we look at IBM, see how that other leader out there is doing after...
absolutely.
You got
$7 billion buyback. Let's see. Yeah. Okay, so she's coming up to ice. So you had IBM break down. So your number there is what, 204.07?
Yeah.
204.07.
So you'd like to see it get up over that?
Yeah, get up over it and close.
Yeah, and you're 203.54. You've gone up to 203.64.
Right, and that'd be a larger ABC down.
Yeah, 1.2 million so far today, and that downdraft was 10 million shares.
Yeah.
On the 18th.
Right. How's that? I know. Folks, I'm telling you, you can learn a huge amount of how the markets move in this market right now. So if you're out there growling and prowling with us, next, work your little butts off, the next 5, 6, 7 weeks, because what happens is that the movement is going to be very quick. Then it'll calm down a little, but the movement will be very quick, which is really cool.
Yeah. What was going on over in Spain? I know they were up about 2% early this morning, but just seeing where that actually is trading into. I gotta put that on my.
Let's see. We got 1.57.
So the IBEX 35 is their top 35.
Yes.
Yeah.
Yes. And we're at 7,100, and all that's doing is another ABC down. Oh, man, this is going to be dangerous. So look at the size of this leg. The size of the leg, folks,
is big, because you're
it's 8,600 to 6,800. So 1,800 points. And I can't even get traction now. I mean, you could do a dead cat bounce up to, what, 75 or something, but we'll see whether we get that. You can see that the juice is nothing. Like when it stopped popping yesterday, it did it with 340 million. It's been going down with 700. 700. So
yeah.
And on the monthly in Spain, it's screaming that it wants to go break the 2009 and go to 2005.
Yeah. So we got the FOMC is about 2:15 or 2:30 today. Is that when?
Yeah. Well,
Bernanke's going
he's
live?
Just talking.
He's just talking. Yeah, he's just talking.
He's talking. He's giving Tom O'Brien the Tiger Fund lots of cash to buy lots of real estate.
Oh, baby, I like that.
That's what it's all about. Stay tuned for that, folks. It's a beautiful thing. Keeps rates low.
Yes.
Keeps interest rates low.
That's for sure. No question.
No doubt about it. Keep the cash flow going.
Yeah. I mean, this is absolutely a time period to take advantage of.
Oh, baby. Oh, baby. Oh, someone just bit Apple. Hey, who's biting Apple out there?
That's so funny.
You know, Adam and Eve, you better watch out. You bite that apple, you're going to be careful. Oh, you got to love it, folks. I'll tell you. Okay, so let's see what she's got. But someone just did bite Apple.
It's kind of interesting because early this morning over in Europe, I think Apple was up about 14 or 15%.
Okay.
Today, right now, in the U.S. markets, we're up about 8%.
Well, Apple only has, if Apple gets into 606.32, folks, you better watch out. Let me just see who dumped on something here. Let's see. What time is it? It's 10:32. Oh, there she is. Look at that. So, okay, if you're looking at me right here, folks, someone just dumped 21,000 shares. That's what just took that. Look at this. 10:31. Oh, it's 10:50. Okay, that's the start of it, though. You see that?
Yeah.
She got 617 for it. That's a big trade, man.
Oh, I know.
So what is that? Every 1,000 is 1.2 million, right? No, every 2,000. Every 2,000.
Yeah.
Unbelievable. Listen, folks, you stay right there. We're going to be up to going up to Newton, Massachusetts. Basil Chapman's going to be growling problem with you in Tucson, Arizona. Larry Pesavento, he's on his horse. He's got his boots on. He's ready to rock and roll.
I love it.
Then back here, David White, myself.
Have a great day, folks.